fourth straight record close. So my next guest doesn't see the gain stopping soon, he says, but he does think he could see Dow 15,000 as early as next week. Joining me now is Paul Schatz, president of Heritage Capital. Paul, you say it could be this week, certainly this month, but then you also say that investors should be close to the door. So are you a little nervous?
I'm a lot nervous. Anytime markets hit milestones, I always dance a little closer to the door. It's almost like investors have this red light, green light, where it's red light until there's some milestone hit, and all of a sudden they go from nothing in to all in. So I'm really concerned that over the past month, the individual investors gotten really bullish. Listen, we're 4 years into the bull market. We're up 118, 120%, and now we're finding folks going from 0% in equities to all in. That makes no sense. I think we're closer to the end than anywhere else. And I think over the next few months, we're going to be building a significant peak in equities. But that doesn't mean we can't at 15,000 first, next week, later this month, certainly over the short term.
But does it really matter, Paul, if the Fed just keeps printing money?
No, and that's a great point. Listen, since the lows in 2009, yes, the news has gotten incrementally better or less worse, but the key has been as banks have loaned less and less and money velocity has gone down, the Fed has printed trillions and trillions, and they're nowhere from being done. So now we're at $85 billion a month coming out of the Fed. I think the sign for the Fed's not going to go from $85 billion to zero. They're going to go from 85 maybe to 80 and to 75 and down. But the minute the Fed pulls the slightest bit of punch, that's going to have a dramatic effect on equity prices. Look what happened in the summer of 2011. Look what happened with the flash crash in 2010. And I think the Fed's going to feel their oats a little bit over the next couple of months, and they won't stop printing, but they'll tighten it a little bit.
So are you putting money in the market now? And if not, what are you doing?
I'm absolutely not putting new money in right now. I think you've had a phenomenal run. I thought a big up opening today would have been a good short-term selling opportunity more than anything else. Clearly, we're going to have some pullbacks along the way over the next couple of days to a week. You can nibble a little bit, but you must stay close to the door, because when they pull away that musical chair, you can't get left without a seat. You're asking what I'm doing now. Frankly, I'm in the latter stages of really enjoying all the equities we put on in the middle of November when it looked pretty nasty, down 8% from the peak. So we're long biotech still, we're long leisure still, I'm along a lot of the indices. I think technology could have a final burst higher over the next 3 to 6 weeks as a laggard play, but I'm absolutely not committing new monies now. I think there's way too much risk. Even if we tack on 500 points in the next 2 weeks, I think there's too much risk to really sit back and enjoy if you haven't put money in so far.
And quickly, Paul, what are you avoiding right now?
Well, I hate commodities. Can't stand commodities. Haven't liked them in a while, and that includes the energy complex in equities. I don't like utilities. I don't like telecom. I think those are second half of the year plays.
Very good. Thank you so much, Paul Schatz. Great information. Thank you. Stay close to the door is his message.